Hello, everyone. Can you believe it? It's the end of June. Okay, let's get a weekly wrap up. I've been out for a while. I was on a little family vacation, but a lot of information. So the biggest thing that we're seeing is nationwide is inventory levels continue to stay extremely low. And that is continuing to have the keep the housing prices up. Okay, so just kind of give you a nationwide look. So if we just look at values from the peak before the big crash in 2007, we're up 62% above that. Okay, we're above that 62%. Okay, the second thing is, but if you factor in with inflation, we're only up 11%. Okay. Another aspect that we have to look at is interest rates. As we know, interest rates have went up dramatically. Interesting thing though. Okay, this time last year, when interest rates went up from the 3s to the 5s to the 6s, immediately this time of year last year, it slowed. It went from here to here. That is not happening this year. The only thing that I could say is people are getting in. It wasn't necessarily the rates that kept people from moving forward last year. It was the shock. And we're coming into a normal time frame. I hear people say, okay, rates are going to go down. Rates are going to go down. I don't think they're necessarily going to go down. Again, they're fluctuating, but I always like to see what the Fed says. And every indicator is that they got two more price increases. They might keep them steady. They might not increase, but they're not. I don't believe that they're going to take them down. Another thing in the news that we have to look at is home builders are on fire. Okay. Stocks are shooting off in let's just kind of give you new construction in 2023 is up 20% when the market itself is down in the, depending nationwide, 30 to 40%. But new construction's up 20%. Why? Well, that's the homes that are hitting the market. We have seen a lack of inventory coming to the market because, again, if you don't have to leave, most people are not leaving because of that locked-in interest rate. Okay, let's look at the local numbers here. We have month over month, we're at 26%, and let's go Portland Metro first. 26 new listings down 26% month over month. Year over year, we are at 29% new listings hitting the market. So that says that this time of year, traditionally, you get more listings. So it's correlating. Here's a big number. Pending sales month over month, only down 10%, year over year down 30%, solds down 34%, and year over year down 36%. And that kind of goes across the board from Clark County to Salem to Southern Oregon, even up north to Seattle. So lack of supply. Demand is lower than it has been, but it's still higher. Last 3 weeks, we've seen mortgage applications increase. So traditionally, when mortgage applications increase, more people start looking at houses. There was one other point that's really important that I think we should make. So what we saw in the last 3 weeks, 3 weeks ago, we took 16 properties pending. Not last week, but the week prior, we took 15 pending. And this week, we only took 5 pending. So when we look at that, that's why I say we have more data than anybody except the local home builders. And I talk to them all the time, and they're on fire. So for resale, what we're seeing is we saw a little slowdown this week. Starting Thursday of last week when we list properties, we saw a little bit of slowdown. Properties that were priced correctly, that were dialed in, still had offers, multiple offers actually. The ones that needed a little work, maybe were kind of pushing a little higher for pricing. They didn't move as quick. Now, if we look at days on market are still below 30 on average. This is a average below 30 days, both from all over Oregon and Washington. So that means offers on the table in 30 days. So if you're one of our clients that does not have an offer on it, number one, don't worry. Here's an example. If you have a property that is not a cookie cutter property, let's say it's not in a subdivision. We have one that was in like the North Plains area. We had been on the market 33 days. We had like 19 showings. And of course, my clients are asking, what are we going to do? Well, we looked at the data. Number one, we're still the best priced property out there. There wasn't a lot of competition. We were still getting the showings that we needed. And after 37 days, we did receive an offer. So if your property is not a cookie cutter property, understand it might take a little bit of time. Overall, when you get over a certain price point, inventory days on market go up. Okay. Now understand, we probably have a good 6 week peak season coming up. So for the next 6 weeks, that's when the market's going to be as the best that it probably will be for the year. The caveat is probably this week with 4th of July. That always, historically, we haven't been in a historic market in a long time because of COVID and lack of supply. But historically, right around 4th of July, we see a little bit of slowdown and then it picks up again. So make sure that if you're getting ready to sell your property or thinking about it, you want to make sure you get that property on the market by the middle of July to hit that peak season. This is Nick Shivers. Remember, anytime if you have any questions, I'm going to give you my direct cell phone number. You can always call me directly, 503-953-4110. All my team members are true experts in data and true experts in negotiation. So rest assured you are in good hands. Until next time, this is Nick Shivers. I'm out.